So how are you going to know when it's the right time to buy real estate? Well, there's a variety of answers to that question, but one of the most important things is you have an advisor that you know is skilled, knowledgeable, and trustworthy. I am Justin Miller with the Chong Miller Group. At the Chong Miller Group, we help people buy and sell homes. We help people invest in real estate. We help people build wealth through real estate. Okay, so this is the February 2026 real estate market update based here in Las Vegas. So in these market updates, which I do every month, I give you the statistics from the prior month, the completed month. So this being February, we'll be looking at statistics for January of 2026, what actually happened in January, and we'll make comparisons what happened from in January relative to the month prior, so December of 25 through January of 26, and the year prior, so January of 25 through January of 26. Okay, but before I get into the data, I want to do one more thing. And that is, I want to do a review of what happened in 2025, because that's important to sort of level set everything that we're going to be talking about with regard to 2026, okay, both this month and months going forward in time. So in 2025, Las Vegas saw the slowest real estate market in a generation, the lowest transaction volume in a generation. Now, when I say transaction volume, I actually mean closed sales. Okay, so buyer and seller negotiate, they get into contract, they go through the whole process. Usually takes about 30 days, and the deed changes hands and the money changes hands, right? It's a closed sale. Now, there's churn in the market. There were a lot of back on markets last year. And so there actually was a lot more activity than what the closed sales look like. But for closed sales, right, and that's where ownership changes hands. If your sale doesn't close, you're still the owner as the seller, and you're still looking to get out. If you're a buyer and your sale doesn't close, you're not moving into that place because it didn't close. If you're a real estate agent, a mortgage lender, a title company, you're not actually executing on the transaction, you're not getting compensated. Okay, so closed transactions, that's a measure that we're looking for in real estate all the time. Closed transactions, single family residential, the bulk of the market, this comprises over 80% of the real estate market in Las Vegas. 20,381 closed sales during the course of the entirety of 2025. Now, I'm going to put that in perspective, but let me just mention, we're a metropolitan statistical area with 2.5 million people, okay? So the reality that we've got only 20,381, that already starts out sounding like a slow number. Well, that number is down 2.9% from the 20,918 that had closed in 2024, okay? That's a significant decrease, especially when you think 2023 had been the slowest in a generation. 2024 had come up by 2.2%. 2025 fell under 2024, fell under 2023, slowest in a generation. Now, let me give you this information in a slightly different perspective, and that is relative to where we were just a few years ago in the strongest year that we had ever seen in Las Vegas real estate. That was 2021. We're down by 46.2%, almost half from 37,763. A massive drop off, right, from best year ever, right, abnormally good year, down 46.2% in just a couple years period of time, right? That's a staggering decrease. But it's not just from the peak. We're down from normal transaction volumes. We're down from every year transaction volumes in the Las Vegas Valley to now the slowest level of activity in a generation. Now that's for single family homes. And some of you may think, well, single family homes had become kind of expensive and therefore maybe more people were buying condos or townhomes. Well, let's take a look at those numbers, right? This is all submarkets combined for resales. In 2025, the whole year, 27,060. That's down by 5.3%. So that means that multifamily sales actually fell more than did single family home sales, because single family were down 2.9%. Multifamily included, right, all transactions down 5.3% from the 28,586 that we saw in 2024. And we're down 46.6% from the 50,675 that we saw in 2021. So some of you may remember a number from years ago. We're over 50,000 sales, right? That was 2021. That was record high number of sales, right? It really was. But we're down 46.6% in total sales volume relative to the peak, and we're down 46.2% for single family homes relative to the peak. And again, generational lows for transaction volume. So we're down from every year. You pick a year that goes back 20 years, right? And I'll tell you, we're down from that. And I can look up the actual numbers. I don't want to list like 20 years of data on each of these things. We're down from all of those years. Generational low. And when you think about it in terms of the population of the Las Vegas Valley, right? 20 years ago, the population of the Las Vegas Valley was, I don't have the exact statistic in my head, but it's approximately 1.8 million. And now we're 2.5 million, right? So if we take the number of transactions and divide it to get by the population to get a per capita rate, we're not the lowest in 20 years. We're the lowest in a series of data that's actually no longer available because it's never been digitized, right? One would have to actually go to paper archives, and we have to go back probably about 50 years to find a per capita rate of sales transaction volume that would be comparable to what we saw in 2025. In other words, 2025 was really, really slow in the real estate market. Again, there was churn. There were transactions that failed, and there were attempts to get into transactions that never occurred, right? So there was activity, but the actual valid activity, the actual activity that makes a difference, closed transactions, a real bust is a year. Now, I've been talking about how this is actually a depression in real estate in Las Vegas. And this is true actually across the entire country, right? I don't know if across the country 2025 was slower than 2024 or slower than 2023, but it was just skimming along the bottom, whether it was slightly above or slightly below, right? There's a depression in the real estate market. So if I say that based on transaction volume, right? Think if you were making cars, and one year you made 1 million cars, and a few years later you made 510,000 cars, right? You'd be laying people off left and right. Your company would probably be going out of business. Well, the real estate industry is actually designed a little bit differently. We don't have big manufacturers, big companies that employ lots of people. Rather, we have some big name agencies who bring on as independent contractors as many agents as they may want to acquire, and as those agents may want to associate with those firms. So Keller Williams, Berkshire Hathaway Home Services, Remax, Compass, et cetera, right? There are some big names, and then there's some little names, the more boutique offices, okay? But very rare do we actually see employment as W-2 employees in the real estate agenting marketplace. So we see these independent contractors, and what that means is Each real estate agent is actually a small business person who opens their own real estate practice, whether that's as an individual or perhaps as a small team. And those real estate agents then, as small business people, decide whether they're going to stay in, whether they're going to leave. They're going to decide which brokerage they actually associate with. And there are competitive reasons to associate with one or another based on reputation or fees or various other things. So what happened with employment in real estate, where employment is measured by the number of independent contractors who maintain their membership as a realtor in the Las Vegas Realtors Association. So if you're a professional real estate agent, you sign up, you pay fees, you become a member of the National Association of Realtors, you become a realtor, and you also become a member of your local Realtor Association. That's LVR here in Las Vegas. Well, so let's go ahead and take a look at these numbers. At the beginning of February of 2026, LVR just published their new roster of members, right? And so that gives a count of all of the people, in fact, their names, the brokerage they're with, their phone numbers, and of all of the people who are associated with LVR, right? All the realtors in Las Vegas. Now, let me just caution, there could be some people who have real estate licenses who are not realtors. They don't join, they don't have the membership. That's fine, but they're probably not actively participating because, among other things, they don't have access to lock boxes. They don't have access to searching the MLS in the same manner, right? They could go to homes.com or Zillow or something like that and search just like a regular person, right? So those are not actually active participants, somebody who just maintains their license, perhaps to do their own transaction on their own behalf once in a while, right? So active real estate agents, 14,500. Now, what's that number mean? Well, that number is down by about 15% from the approximately 17,000 that have been active real estate agents in 2023. So this is 2026. So over the course of 2023, 24, 25, we've dropped 15%. Now remember, 2021 was the record year for transaction volume. Well, we've dropped by 28% from that, from about 20,000, a little over 20,000 members in LVR, at that time called GLVAR, right? So we're down since this drawdown in transaction volume has started. We're down 28% in terms of number of realtors in Las Vegas. And since we went into this very low transaction volume environment in 2023, 24, and 25, we're down another 15% in terms of the number of independent contractors, the people who actually get a license, work in real estate here in the Las Vegas Valley. And that's understating the drawdown, because it's true that there are new people who become real estate agents every week, right? The barriers to entry into the real estate agenting world, very low. Like high school education, a small certification program, take a test, that's it, right? You become a real estate agent. And then you pay fees beyond the mere licensing fee. You pay fees to become a member of the realtors, to become a member of LVR and NAR. Okay, so that's it. That's the very low barriers to entry. So I actually have a neighbor who just became a real estate agent within the past couple of months. I know other people who've become real estate agents within the past couple of months, others who've become real estate agents over the past 6 months or 12 months, right? So when I say that we're down 28% from the peak, that's net, right? We've actually been losing more of the experienced real estate agents, some of whom only had a year or 2 or 3 years under their belt, but some who had a long time under their belt. And they've been churning and replacing at a much lower rate with people who have no experience. So it's kind of interesting because what it means is actually we're down 28% in terms of the employment of real estate agents, and the average level of experience of those people who are actually realtors has come down because of that churn, because we're getting new people replacing some of those who are leaving, right? So the average level of experience in the industry is decreasing, and decreasing pretty considerably. Something that you should keep in mind when you're thinking about who do I hire as a real estate agent. Make sure you're talking to people. Now, it could be that some people are brilliant and super fantastic, even with very little experience, but it's probably not the person you want to entrust the most important financial decision that you may engage in your life to someone with no experience. You might want to find somebody who actually has experience working in the industry and working in the kind of environment that we have now with these very low transaction volumes and finding success doing it. Okay, so that's what happened with transaction volume. That's what's happened with employment among real estate agents. So one other thing I want to go over is in terms of looking at 2025 as a year in review, and that is prices, right? So we've been hearing everywhere on, in the newspaper, online, any place you want to look, housing is incredibly unaffordable and blah, blah, blah. Okay, so maybe that housing has some affordability challenges. And as I've noted multiple times across multiple of my videos, there are ways to overcome the affordability challenges. If you're looking to purchase property and you're concerned about affordability, talk to an agent like me who can tell you ways that we can increase affordability for your purchase. If you're a seller and you're thinking, there's an affordability problem, I don't know if I'll be able to sell, talk to your real estate agent, talk to me. I can educate you about ways in which you can make your home more affordable. And that doesn't mean by lowering the price and getting rid of all of your equity or things like that. There are literally ways to make your property more affordable to a buyer. Okay. All right. So pricing action, single family, average price throughout the entirety of 2025. Now, this is the median sold price, but it's averaged across the whole year. So median sold price in 2025 for single family homes, $469,000. And that's up by 1.0%, slightly, up from $464,100, which was the average for 2024. Okay, so that's up $4,900. It's not. So it's up, $4,900 over the course of a year, right? 1.0%. Now, is that a big increase? No, absolutely not. It's not. Is it a decrease? No. In fact, we've been hearing lots of news about how prices are falling. They're not falling, right? That's the average price in 2025 relative to the average price in 2024 for resale single-family homes in the Las Vegas Valley. Up slightly, 1.0%. Okay? Even though transaction volume fell by 2.9% for those single-family homes. That's interesting. Lower transaction volume and prices went up. Right. That says something if you understand the economics of the marketplace. And it doesn't say that housing prices are way overpriced. It doesn't say that the market's collapsing. It doesn't say that whatsoever. It says we have something in the market where buyers are willing to buy, that's demand, and where sellers may be willing to sell, but there's a constraint on the inventory that's available to the buyers, and that's causing buyers to push prices higher or to accept the higher prices that some sellers are wanting to charge. Okay, so that's for single-family resale here in the Las Vegas Valley. But what about the other submarkets, right? So if we look at total transactions, that's all submarkets, single-family condos and townhomes. The average for all of 2025, $430,800. That's up. It's up by 1.6%. from $424,100. So it's up $6,700. It's up a little bit more strongly than the single family housing market, which means that condo and townhome prices combined as multifamily actually increased slightly more than did single family homes in 2025 relative to 2024. Even though multifamily home sales, condos and townhomes, fell at a greater rate than did single family home sales. What's going on? Why, again, right, when we see transaction volume going down, right, a really simple look at an economic chart is going to suggest, well, that means that there's not enough demand and the prices should be going down along with the transaction volume. But that's not what happened, right? It's a little bit more complex understanding of economics to explain what actually happened. And what actually happened is prices went up, transaction volume decreased because of supply constraints. And we'll get into that when we start looking in just a minute at the specific data for the month of January in this February 2026 market update. Okay, but some background information. Why might we be seeing these things, right? Just as a general set of statements. Well, I've talked in my market forecast video, which I released in December, and I talked last month in the January update. I'm going to mention it again this month, right? It's a recurring theme. In fact, I talked about it many months of last year. Uncertainty. There is a massive level of uncertainty in the environment, right? With regard to employment, with regard to interest rates, with regard to travel, with regard to, you name it, right? With regard to healthcare and the availability of health insurance. There's a tremendous amount of uncertainty in the marketplace nationally, and that's impacting us here in Las Vegas. And that's causing sellers to pull out of the market, it's causing buyers to pull out of the market, it's causing interest rates to be higher than they should be, etc. So what are some of those background items, right? Because as I started to prepare the information for this particular market update video, I started thinking about, what are those items that are creating uncertainty in the environment, right? Because we tend to forget these in measure unless we actually are thinking about them. So here's a really partial list of the really highlighted, the really consequential uncertainty issues, right? And they manifest across a whole bunch of things. But remember early April last year, we had Liberation Day. I don't know if you felt very liberated, right? But that's when the US decided that we were going to impose massive tariffs on virtually every single trading partner that we've got around the world, right? The Liberation Day tariffs, April 2nd, 2025, threw a lot of problems into the economy with prices increasing, partly because of tariffs and partly because of shortages, because there were fewer things coming into the country that people might want. Right? We had the federal government shut down for 45 days last year, right? And by the way, in case you didn't know, because it was shorter and relatively quiet, and I guess it's becoming more common, at the beginning of February, we had another 4-day government shutdown. And on February 13th, we're likely to at least have one of the federal departments also go into a technical shutdown because it's the last federal department that hasn't been funded, right? So just cascading shutdowns, in addition to being the longest shutdown of the federal government ever. Massive immigration crackdowns that had actually led to a decrease not only in foreign-born population in the US, but it appears that we actually now have an actual decrease in the level of population in the United States, which, by the way, is throwing all sorts of weird artifacts into employment numbers. Because we're a growing society, we always see population increasing. And so when we start figuring out, well, how many people are employed of a decreasing number of people? And of course, with the government shutdown, we lost several months worth of data on employment. So what employment actually looks like nationally, a little bit hard to assess right now. we've got federal troops, federal forces occupying American cities across the country, right? And detaining and even shooting and even killing U.S. citizens. We've got attacks on the independence of the U.S. Federal Reserve, which sets monetary policy, and that does not just mean interest rates. Monetary policy is one of the two major features about the way in which the government can influence the functioning of the economy, the other being fiscal policy. So that's really consequential. And by the way, it's not just the Federal Reserve. It's also attacks on the independence of the press, etc. So, and then we've got the mandating of U.S. government investments now going into private companies and saying, Intel, you must give us 10% of your company. We've got mandatory U.S. investments in U.S. steel. We've got mandatory U.S. pricing decisions for NVIDIA, right? We've got this weird socialism that's creeping into ownership of American companies because of what this administration is doing, literally demanding that these companies give partial ownership to the government. Okay, so those are all negative. They're all uncertainty-inducing issues. And those are like the headlines, right? There's been a whole lot more over the course of 2025 that we could dive into and look at explicitly, but there's no reason to. I'm just wanting you to note, wow, 2025, there is a lot. We've absorbed a lot as a society. And I don't mean that we've acquiesced to it. We've taken body blows, and I don't know where those continue. Well, that's further uncertainty, right? But in Las Vegas, I will comment. We've had continued population growth, right? Where the country as a whole appears to be shrinking, and certainly foreign-born population in the U.S. absolutely has been shrinking over the course of this past year. In Las Vegas, we continue to grow. We have more people here now than we had a year ago. So that's differential for Las Vegas. We also have significant continued investment in infrastructure, in resorts, in sports, here in the Las Vegas, and in fact in health here in the Las Vegas Valley, right? Those are all growth issues here in Las Vegas, and it's bringing people here and it's supporting people who are coming here. Okay, so that takes us through the year in review for 2025. So let's go ahead and look now specifically at the statistics for January of 2026. So the first thing we always look at in the regular market update is pricing. Okay, so single family home pricing. Remember, this is only sold, closed transactions, single family resale here in the Las Vegas Valley. Median sold price $455,000. That's down. It's down $5,000 or 1.1% from the $460,000 that we saw in December of 2025. Now, I had commented last month and I commented the month before, we often see prices looking weak in the December and January statistics, because there are fewer people who are actually engaged in the market, and some of the sellers who are actually selling or trying to sell in that market are more flexible. And so we can see prices dipping, not showing any kind of trend. And I think that that's all that has happened here. So 455,000. Now we are down 3.8% year over year, meaning compared to January of 2025. Okay. Now I do want to note two things before we look at multifamily. New home sales in the MLS. Now remember, the only new construction that appears in the MLS is new construction that a builder has decided they want in the MLS for some very particular strategic reason. It could be for signaling, it could be they're desperate to move a particular product. Very few new home sales actually occur for something listed in the MLS, all right? In other words, builders are picking and choosing. I want this one in the MLS, but not these 10, right? And the problem is there's lots of strategic reasons that they may engage in picking and choosing a particular property to put into the MLS, and we don't know what those are. So looking at new home sales for something that's been a new construction in the MLS gives us actually a very warped view of what's going on with regard to new home sales. It also does not give us a valid comp for the resale marketplace because they're not resales. So it's data that I parcel out because it's literally noise. It's incorrect. It's not part of the population. But people like to talk once in a while about new home sales, and LVR puts out their data, their statistics that gets picked up in the press, inclusive of new home sales, improperly, right? It's literally noise, it's dirty data. It's not appropriate to analyze it. But that's what normally gets analyzed by others in the marketplace who are putting out information. So I just want to highlight to you, $550,000 was the median new home price that sold in January of 2025. Now, that's the highest new construction home price ever in the Las Vegas Valley, right? By a lot, actually, right? So not in any way typical. We saw median resale price come down by $5,000. New home sales listed in the MLS, wow, way up, really way up. Okay, now if we include, to give you an idea of the relative size of the market, if we include that new construction number of sales that actually took place from the MLS, that would have pulled if we included that as sort of like all home sales, all single family home sales, that would have pulled us up from 455,000, which is the real number, to $470,000. Right? Which would have suggested that prices actually went up in January, but they didn't. They went down. They went down by $5,000. The median resale sold price, $455,000. Okay? That's why I parcel out new construction. It's dirty data. We don't understand exactly the reasons of why it's there. Yeah, maybe a seller wants to sell it. Okay, great. But maybe they don't. Maybe they just want to display it. Oh, look what I've done. Right? So we don't know, but it means that it's not the same thing as a resale. And as a reseller, you're not competing with that particular property. Okay. So I parcel that out, the real number, $455,000, and down $5,000 or 1.1% from the month prior. Now, what about condos? Condo is kind of interesting. $244,500. That's up $37,000. Yeah. That's up $3,700 or 1.1% month over month. So condo prices went up in January relative to December. Now they are down 4.4% year over year, right? So relative to last January. And we know that condo prices have been stressed over the past year, right? So that's what we're seeing on that year over year number. What about for townhomes? $330,000. That's up. It's up a lot. It's up $12,300. Now, in December, we had seen townhome prices dip really significantly, and I suggested that was probably aberrant just because there's small numbers of transactions, and each individual townhome, this is true in condos as well, but even more with townhomes, can have an outside impact on the pricing metrics. So what we see here is January recovered, we're up $12,300 or 3.0% month over month. We are down 2.7% year over year. So year over year, down 3.8%, single family down 4.4%, condos, and I'm sorry, I misstated it, down 2.7% townhomes. Okay, so slightly down, single digit, in each of these sub-markets for pricing in January. Relative to last year, single-family home prices down relative to the month prior, but condos and townhomes both rebounded, coming back up. Now, I give a forward-looking indicator here too, and that is I look at price per foot. Price per foot gives us some idea of how the outer bands of the market is, right? The median is literally the middle point in the market. but we'd like to understand something about the range, or at least the grouping of activities that are in the tails coming out from the median, right? So generally, skewed bell-shaped curve is what we're looking at in real estate. So if we see the median price per foot growing relative to the median sale price, we know that it's the higher end pricing tail that's getting more activity. Same thing if we see the median price per foot growing or decreasing, whichever, in the lower, relative to the median sold price, we know something's going on in the lower tail of the market, right? The less than half middle of the market. So what we actually saw was price per foot for single family was down 1.6%. And for multifamily, for both condos and townhomes, the median price per foot actually went up. So price per foot actually behaved very much in line in the market relative to median sold price for the month of January. So that's interesting. That indicates that stress in the market is actually taking place across most of the market, as opposed to being concentrated in higher or lower end properties. Okay, so that's pricing. But what about transaction volume? And this becomes interesting, right? Pricing happens every month. It's what clears the market. But it's the aggregate of what's clearing the market for each individual transaction, right? So it's not like we have oranges and everybody's buying an orange and it causes the whole market to go up and down. We have people who are selling highly individualized product, individual seller, individual unique product to an individual buyer. And so we're aggregating that data, and that's where we got these market statistics. So they're a little bit different than a commodity traded marketplace. But so price is the aggregate of everything that actually took place as a closed transaction during the particular month. But what about demand and what about supply? Because those are more easily added. And so we know that there is some number of buyers and some number of sellers. Okay. And so demand, that's the number of transactions that actually closed, down in all submarkets, month over month and year over year. Single family homes sold, closed transactions, 1,299. That's down 298, or 18.7% in January relative to December. It's also down 9.1% year over year. So January of 26 relative to January of 25. Condos, 177. Down 40, or 18.4% month over month, down 10.6% year over year. And townhomes, 156, that's down 36 townhomes, or 18.2% month over month, and it's down 4.3% year over year. Now, that just goes to show you, wow, January was really slow. Now, we do know that there's a strong seasonal pattern in real estate. People tend not to be looking for properties and therefore tend not to be putting contracts on properties from around the middle of November through New Year's Day, right? And so we see fewer contracts being written, and consequently we get fewer transactions actually closed. And that's true in December. It's true in January, although January should have been picking up a little bit. So this is a little bit stronger of a seasonal downward trend than we would expect in January. We usually see the biggest part of the downward trend in December. So these are actually pretty significant drop-offs. But two insights. January of 2026, for single family, for condos, and for townhomes, all down relative to January of 2025. And what was January of 2025? January of 2025 was the first month of the lowest transaction volume year that we've experienced in Las Vegas in a generation or in multiple generations on a per capita basis. So we're starting 2026 even more weakly than we started 2025. And in fact, we're starting 2026 more weakly than we started 2024 across all of those market segments as well. So January of 2025, not good. January of 2026, pretty bad, right? For those who've been thinking, this is the year, breakout year, everything's going to return to how it was pre-pandemic, we're not starting that way. Go back and look at my market forecast. You can find it, the 2026 market forecast, and you get my predictions. So just as a really short note, pricing will go higher. Transaction volume is going to remain really weak. I don't think the transaction volume is actually going to shrink relative to 2025. I think that it will improve, but not by a whole lot, right? Most of the respected forecasters out there are saying, to return to normal times, but they've also said that in 2025, and they also said that in 2024. So I don't think they're right. Okay. So 2026 is starting weaker than was true in 2024 or true in 2025. The other sold insight, pending sales, were up very strongly in all submarkets. Now, when I say that, pending contracts, that means buyer and seller got into agreement, negotiated, signed the contract, and now we start through the escrow process, and we should see most of those sales, most of those contracts actually close, and they would show up as closed statistics in February. Pending condos, really big increase, a little better than normal seasonal patterns. Pending townhomes, really big increase, little better than normal seasonal patterns. What I'm suggesting is normal seasonal patterns, we normally see really big increases for pending contracts in February relative to January. Okay, so that's good, right? But a little bit stronger than normal seasonal patterns suggests February could be really good. Well, I said that for condos and I said that for townhomes. For single-family homes, and single-family homes, the dominant share of the market, over 80% of the real estate market here in Las Vegas Valley, we saw really good growth in pending contracts. Not the strongest, right? Stronger than we had in 2025, but not as strong as what we actually saw in 2026. In fact, relative to 2025, just barely stronger, right? So normal seasonal pattern in single-family homes, better than seasonal pattern in condos and townhomes. All right. So one other note, right, for sales, right, closed transactions. This is kind of interesting, and that is with regard to foreclosures. Foreclosure sales in January, basically nothing, but in 2025, cumulative foreclosure sales, single-family homes, 5, condos, 3, townhomes, none. So across the whole of Las Vegas Valley, across all market segments, foreclosure homes, you remember all those videos, everybody's going to be foreclosing, so tons of great deals out there. 8, right? That's the whole real estate market produced 8 closed foreclosure sale transactions in 2025. Yeah, not the place to be making money. Not the place to be looking for and finding your next investment property or your next really cheap home to move into, because it's just not happening. Okay, so, all right, next thing is inventory. This is the supply number, right? So inventory in January, single family homes, 6,387. That's down 297, or 4.4% from what we saw in December. Now, normal seasonal patterns suggest that January is around what we see in December, right? We may get a little bit more inventory in January. We're down, right? We're not down a whole lot, but we're down. We're down 297 or 4.4% month over month. We are up 4.1% relative to where we started last year, January's of 2025, right? We're up 4.1%. Condos, different story. We're up 27. That's not a very big number. We're up to 1,372 or 1.9%. Month over month, and we're up 7.8% year over year. Townhomes down to 1,009, down 15 or 1.4% month over month. We're up substantially. We're up 22.9% year over year. So, two insights with regard to inventory. One, all segments, all submarkets showed sequentially lower year-over-year gain relative to the month prior. So in other words, if the month prior showed a 10% increase year-over-year, and now we're showing a 5% increase year-over-year, we had a sequential decrease in year-over-year inventory gain. Okay, well, I tell you that because we've had that same pattern across the entire real estate market, all submarkets, now for 10 months, right? Almost a whole year. We've been seeing inventory growth coming out of the market, right? So is inventory higher than it was at this time last year? Yeah. For single family, 4.1% higher. For condos, 7.1% higher. For townhomes, substantially, but we had seen the townhome number more than 50% higher earlier in 2025, right? So sequentially, we're shrinking that excess inventory that we saw last year. And that excess inventory did not mean we had a lot of inventory. It just means we had significantly more inventory than what we had the year prior to that, okay? Now, second insight, new listings increased dramatically in all submarkets. So for single family homes, the increase in new listings was on a par with what we saw in January of 2025. Right, so seasonal, nothing beyond that. In townhomes and condos, we saw a bigger increase than we had seen for new listings than we'd seen in 2024 or in 2025. Okay, so that's significant. We may see some significant inventory build occur in condos and townhomes looking forward. But again, right now, we're not really that much different, and we're different higher than we were in the month prior by a decreasing amount. Okay, but that's listed inventory, right? And so some months, I've been, over the past year, giving you a different perspective or an additional perspective on inventory because it's really critically important. And you're not getting this anywhere else, right? I've not heard this information coming from anyone else, partly because it's actually hard to get the numbers and put the analysis together. But it's really critically important to understand. The median sold price is what the median sold price is, right? And if we look at single family homes, we found out that in January, the median sold price was $455,000. Okay. Well, what that means is if you have inventory sitting out there waiting to be sold, if it's a median home and it's priced at about $455,000, okay, it's in the market, it should sell, right? If it's priced at $100,000, well, there's a problem, right? So there's got to be something wrong with it. It should have sold before it was even listed, right? That's priced below where the market is, right? If it's at $1 million, well, that's priced above where the market is. Now, some individual houses are completely dilapidated, falling apart, asbestos and clay pipes and etc. And it just needs to be torn down and start over, right? And so maybe it's only worth $100,000. Some houses are amazing with huge views and large lots and really amazing appliances and beautiful windows taking advantage of all the views and everything else. And so maybe that house is worth $1 million. In neither of those events are we describing a median home, right? The median home in Las Vegas is the median home in Las Vegas. And that's a pretty decent condition That's a 3-bedroom, it's a 2-bathroom, no view on a small lot, right, with a 2-car garage, probably sitting in an HOA, because most houses in Las Vegas are sitting in homeowners associations, all right? So if your house is the median house and you want to sell it and you price it at $1 million, you ain't selling, right? And so we can say that even if you put your house into the market at $1 million, it's not really in the market, right? It's sitting there maybe with a sign in the front yard, or maybe no sign. And you're basically saying, oh yeah, I've got a really valuable house, but nobody in the world is agreeing with you on the belief about the value of your house, and you're not going to sell it, okay? Well, I can do the same thing with all of the listed inventory. Right. Anyone can if they've got the time and the knowledge about how to do the statistical analyses. Apparently that's in short supply in the Las Vegas Valley. In fact, in most markets around the country. So I look at all of the houses that are sitting in inventory, right? And we know that all of those houses that are sitting in inventory, that number was, right, single family homes. Where's that number? Oh, that number is right there. It's 6,387. Okay. Now, what I'm going to do then is I'm going to look at the median for that inventory. So I can sort all of the houses that are for sale. I can find the middle point, and I can look at what that number is, right? And that number actually is not $455,000. That median list price in January is $554,721, right? $99,721 higher than the median sold price. Basically $100,000 higher. Instead of being $455, it's $555. Okay, $100,000 higher. Well, is a price $100,000 too high? Is that a reasonable price? Is that something that's sitting in the market that's going to get a buyer? No, right? You know, if you've ever looked for a house, you go into homes.com, you go into Redfin, you go into Zillow, Realtor.com, wherever it is, and you put in the criteria that you want. I want to have a 3-bedroom home. I want to have 2 bathrooms. I want to have a 2-car garage. I want it to be maybe in this area of Las Vegas, maybe by zip code, or maybe draw a polygon on a map. And yeah, I want it to be priced between these 2 levels, right? And if you're looking for a house that's about $455,000, your pricing levels, you're not putting in, show me everything from $355,000 to $555,000. Why? Because you get too much, and a lot of it is garbage because it's not in your budget. It's not looking like the kind of place that you want to live in, right? So instead, you're putting on more reasonable gates. Now, maybe it's 400 to 500. Maybe you're putting gates that are much more narrow. Maybe it's 430 to 480, right? You have your own strategy about how to apply these gates to give you the information that you want, but you're not looking 100,000 high and 100,000 low. You're not. And if you call a real estate agent, which you should, because they can be quite helpful, especially a knowledgeable and skilled real estate agent like me, and please feel free to call me, that agent is going to be doing a bounded search, probably in the multiple listing service, and they're going to bound that search on price criteria as well as the specific things that you want and need in a home. And they're not going to find something that's priced 100,000 too high or 100,000 too low, right? Or $1 million too high, or what have you. They're going to find things that are priced around the number that you're looking for, that you've told that agent, this is my budget, or this is what I want to spend, which is maybe a little bit less helpful because what you want to spend may not be connected to any form of reality. Just like a seller who prices their median home at $1 million, it may not be connected to any form of reality. Instead, you want to be working with your real estate agent to go to a lender, get a pre-approval letter that tells you what you can actually spend. And by the way, when you're talking to that lender and you're trying to get that pre-approval letter, don't tell the lender, this is what I want to spend, because they'll write you a pre-approval letter at what you want to spend, which is not connected to the market. Instead, you want to tell the bank, the loan officer, I want to get a pre-approval letter. Here's my information. What can I get? And then the lender can tell you, okay, these are the numbers you qualify for. And then with that information, your real estate agent can sit back down with you and figure out, okay, you want to spend X, you're approved for Y, which may be more or less than X. And here's how we're going to deal with that issue. And by the way, here's what the difference is in monthly carrying cost, because the difference between X and Y might be $5 a month. It may not be consequential to you, even though the headline number looks consequential, okay? So it's important to get what you qualify for as opposed to what you'd like to do. All right, so median list price, $100,000 too high. Now, we can then take that information, we can normalize all of the listed inventory to find out what actually is appropriately priced inventory, okay? What we actually find is that the real inventory, the legitimate inventory that's sitting in the market right now, not priced 100,000 off. The correctly priced median inventory, 3,236 homes. It's just about exactly 50% of all of the listed inventory is real, meaning just about 50% of all the listed inventory is fake. It's just sitting there looking pretty, right, with pictures. Oh, look at those houses. Oh, so nice. But you're not actually going to go look at the house. You're just browsing pictures. Swipe left, swipe right, whatever it is. That's not real. Right? So half of that inventory, and this is for single family homes, so it's going to be true. I have not done the numbers, but it's going to be a true kind of issue with regard to townhomes and condos as well. Half of what we think is sitting in inventory is fake. It's not real. So that means if we've got 3,236 single family homes sitting in inventory in January, we're less than 40% of normal inventory for January, right? We're less than a third of normal inventory if we're looking, like in March or April and we're sitting at this level, but for January, less than 40%. I don't mean 39.8%. I mean, we do the statistics, it's going to come out to be like 37% of normal inventory. That's it. We are really inventory constrained, irrespective of that top line number and the number that you hear from everyone else who gives you any kind of information about the real estate market, because they're either not capable or too lazy of doing the actual analysis to look at what's going on sitting in that inventory. And by the way, if you've got a house and you want to list it and you talk to a real estate agent and the agent says, oh, we put it whatever you want, or the agent says, yeah, let's look at all of the listed property and we're going to price you relative to listed property. If listed property is at the median 100,000 too high and you price relative to that median because that's what your agent told you, they're hurting you. They are literally harming you because they are pricing you out of the market, right? So you want to actually understand the kind of information that I'm giving to you here, because it tells you what's actually taking place in the market and where you should be priced, because where you should be priced will get you a sale. Okay. We don't have an inventory surge. We don't have a lot of inventory. We are very inventory constrained. Now, one other statistic that I give you every month, and that is the back on market. And I've been tracking this since October of 2020. Finally, some people are out there talking about it, but I don't know where they're coming up with their numbers. I'm not able to duplicate them. Maybe they're including all of the new construction stuff. I don't know, but they're coming up with numbers that are just completely wrong. The numbers that are real are really disturbing. Contract failures. Now, the way I calculate contract failures is based on back on market. And as I mention every month, and just as a short note, back on market means a contract that failed that came back into the market to be relisted. Okay? In other words, does not count those that failed that did not come back into the market. So back on market's an undercount for failure, but it's significant, right? It's an important indicator to us because it's the only failure indicator that we've got that we can readily access. Back on market, January of 2026, single family homes, 623, that's 32.4% of contracts failed. A third virtually of contracts failed, right? You're a buyer, you negotiate into a contract on the house you really want. That's, a 1 in 3 chance, you ain't getting it. You qualified, you ain't getting it. It doesn't matter, you worked really hard, you're not getting it. You paid for the inspection, you're not getting it. It's just falling apart. Oh my God, it's horrible. I mean, really, really horrible. Well, gets worse. Condos, January 2026, 90 back on market, 90 failed contracts. That's 33.7%, over a third. Townhomes, 94 failed contracts back on market, 37.6% of contracts failed. Again, these are undercounts because they don't capture contract that failed that did not come back into the market. This is as close as I can get to the real data, but they're undercounts. I don't know how big the undercount is. It might be 0.5%, it might be 3%, it might be 5%, I don't know. But these numbers back on market, devastatingly bad. And they say really bad things, frankly, about the quality of agenting that's existing in the real estate market at this time, as well as the quality of appraisals that are taking place in the real estate market at this time, as well as a number of other things, right? And certainly reflective of high levels of uncertainty, both on buyer and seller parts, that they're thinking, maybe I'm just better off walking away from this transaction because at least I know what reality is going to be. I'll still be in this house, or I'm not going to be in this house, right? Really devastating numbers. And these numbers have been really elevated from October of 2020, and maybe a couple months prior to that, but from October of 2020, when I started looking at this issue, through now. Devastatingly high numbers. And when you read that Redfin says, oh, it's 19%, no, Redfin's numbers are just all wrong, right? These numbers are devastatingly bad. Make sure you're talking to an agent who can help you understand why these contracts are failing and can help you protect yourself from contract failures, right? It's really, really critically important. So I am Justin Miller, principal and co-founder at the Chung Miller Group. And at the Chung Miller Group, we help people buy and sell properties. We help people build wealth through real estate. Please smash the like button, hit the notification bell, subscribe if you've not already, and please share these videos with your friends, your neighbors, your family, your colleagues, because this is actually really helpful information. All right, I'll see you in the next video.